everyone. I think we are live, and thank you for joining the first joint custody podcast. I think it's the kickoff session, but it already looks, at least technically, it works. So I'm very happy about that. And I'm thankful that Alexander Thoma from PostFinance, Head of Digital Assets and Gen 2 and FinU's most influential person in Switzerland in digital assets, is joining us for this kickoff. Thanks, Alex, for being here. Maybe a brief introduction from you about yourself before we kick off with some interesting questions around the topic.
Hi, Benjamin. Of course. Thank you very much for the intro. My name is Alex, and I work at PostFinance, aka PostFinance, which is the largest retail bank in Switzerland and a systemic important bank here. And I'm in the role of the head digital assets, which means I'm responsible for all digital asset projects, initiatives, product, services along the line. And for us, that's not just cryptocurrencies, it goes further than that, into, of course, stable coins, deposit tokens, and everything in between. And I'm happy to be here and looking forward to all those very interesting questions.
Yes, thanks for being here. Maybe for some of the people joining who don't know me, either I'm Ben Duvet, I work for GK8 by Galaxy, which you should know because you signed up to the podcast. I'm a global head of partnerships. Prior, I was at the ECB, BNY, Commerce Bank, a long time in digital assets, but also a long time in traditional banking before. And I think that's a little bit leading into the question I wanted to ask you, Alex, because I get it a lot, and I think you might get it a lot, but I think it's very interesting for people. How did you get into digital assets? What's your personal journey to get to where you are now?
Yes, so I get asked that a lot. So my personal journey in digital assets started in 2017, right around the time or a little bit before the ICO hype started in Switzerland. We just had the Tesos ICO. For those of you who've been around that time and remember, and that was the largest ICO at that time ever. And then I founded a startup in the Crypto Valley in Zug with a couple of friends I know from university, and it was called Alethina. And we pioneered the tokenization of Swiss security tokens, namely tokenized shares, tokenized participation certificates, stuff like this, right? And we were very early on, and at that time we did everything on Ethereum, and the whole legal side was a little bit untested waters because we didn't have a specific blockchain law or something like this yet, DLT law, that specifically allowed the tokenization of Swiss shares. So we had to do some crazy legal workaround stuff. It was all fine in the end, but we had to come up with creative solutions, not only technically, but also legally and regulatory wise. So it was a very interesting time from 2017 to 2020 in that startup. I learned a lot, did a lot of hands-on stuff myself. Obviously, as a founder, you have to have long hours, and you don't have an armada of workers that you can delegate to. So you do everything yourself, and it really this time really shaped me professionally in a way that I haven't had it before. And out of this, I came to PostFinance because they were looking for a guy that is taking charge of digital assets in their innovation unit. So PostFinance has a separate innovation unit that runs in parallel to the main operational bank. And their job is basically to do everything that the main bank does not do. So everything that's not already operational, they look at and they prepare the whole organization to take this topic over at some point in best case scenario. Worst case scenario, it's the conclusion is we don't do that and it's just for the garbage bin, which I say 80% of the stuff doesn't make it. 20% of the staff does make it, and that's usual in innovation, right? And so I really took responsibility of the whole topic digital assets in that innovation department. It's called Venture, by the way, and I just ran with it basically. So I really formed a strategy from the ground up for the whole company, did the education of the whole management together with my colleague David, and then we
Obviously,
really
well, because now you're the head of digital assets.
yes,
So you made it out of the
yes,
lab, right? I
this
mean,
role
that's
I made
basically
it out,
you made
yes.
it to the main stage.
Yeah, so I was in the cellar, and now they gave me an office with a nice view. No, so it was a success in a way that my job that I have now didn't exist before. The jobs of my entire team didn't exist before. So we had the moment where we really had a decision from the management, okay, go or no go for this whole thing. And it was not just about cryptocurrencies. It was not just about the short-term potential of that. It was about a whole long-term vision of the entire topic in our organization, and that was very important. And then 2022, we made the jump. We brought the topic into the main part of the bank. We formed a new unit. We hired people. I built the team up from the ground up. I have a very, very high performance team. I can say that with a lot of a lot of proudness, and we're in full gear now, and we have a live roadmap. We're working towards great things. Not to sound like Donald Trump, but in our case, it's actually true. And yes, I'm looking forward to the next 3 years. So now I've been in this job for 3 years in this role, and I'm looking forward to the next 3 years, which will be absolutely detrimental to our long-term success in this field.
I think we will get maybe to the long-term bit a little bit later, maybe the more tactical, more short-term or current build approach. So what's your current strategic approach for blockchain and tokenization, and keeping up in mind those next few years, while we can, I think, have a very nice chat about how we see the future and vision for DLT and crypto in that very long term?
Yes, so good question. Thank you. The whole topic digital assets is very broad, and it all came outside of the banking world to maybe disrupt a little bit the banking world or the financial world. And now banks are embracing it, which in itself is a little bit weird, maybe on face value. But when you look deeper behind it, it all makes sense, because the entire topic is one big technological infrastructure revolution. And one of the main use cases for that is financial applications, because there we have a lot of trust issues in the traditional systems, and a lot of reconciliation needs, settlement needs, clearing needs, and there the technology can have a lot of impact. So what banks did then is to look at this technology and say, okay, that's interesting to us. A lot of things are still 5 years out, 8 years out, 10 years out, whatever, not yet market ready, in a sense that we have right now the technology to already put it in production, or we have the client needs and the monetization potential right now, but it's a long-term play on that. So when you look at the digital asset world, you have everything from tokenized securities to payment tokens, stablecoins, deposit tokens, CBDC, you have cryptocurrencies, you have NFTs, and everything in between. So it's a huge topic that has a lot of impact on many different parts of the bank, from treasury management.
Let me ask a quick follow-up there, right? So
sure.
I'm at a post-trade conference, so people exactly talk what you talk about, right? They talk about this enablement of friction we have in the ecosystem, we have in banks. Um, but then they all say, well, but where's the business case, right? It doesn't pay for the implementation of the technology right now. And my answer, and maybe that's something for you to challenge, is always, well, there is actually an operational asset class available which could help you pay partly for your build, and it's crypto, right? And if and there's a second angle to it. There is another asset class now emerging when you feel maybe a little bit more uncomfortable about crypto, your senior management is not bought in yet, which is stablecoins, right? Both use the same technological basis as those other more regulated, more standard, I mean, regulated they're all, but more standardized, more in the traditional sense, digital securities, as you mentioned before, with all those efficiency plays. So that's an argument I always make. Maybe look at that to pay for your build and really operationalize something first before the end. Then you go into the long term, maybe more difficult from an ROI perspective to justify investments around efficiencies and other topics. What's your view there?
Yeah, that's exactly where I wanted to go, actually. So the topic is wide, but not everything is market ready at the same time. And when we decided to go into the space, not everything was market ready. So we decided, let's do a step-by-step approach and start with the one thing that pays the bills and keeps us building up knowledge along the entire organization. That is the same technical foundation, that has the same technical foundation as the other topics that may come in, like, let's say, 5 to 10 years. And this is why we started with cryptocurrency trading, custody, staking, etc. Because right now we solve a client need. We have a client pain point that we can solve. So there's obviously a monetization potential for that. We have a business case, and that basically pays the entire build-up of know-how for the long-term game, which is the payment side of the house, the security token side of the house, and everything else. So this is the strategy we came up with in 2021 that we still feel is the right approach for us. It may not be the right approach for everyone. Everyone has a different kinds of view on these kinds of things, on cryptocurrencies, for instance. But for us, this was absolutely the right move, and we never looked back, to be honest.
Well, being part of a crypto custody solution, I really like that answer because it means you build up the infrastructure where you need our piece of tech to as part of a long-term strategy. But maybe to put a little spotlight on some of the topics we also discussed before, right? I mean, you mentioned cryptocurrencies as one of the topics, but you also mentioned stablecoin and deposit tokens, right? And I think there's a lot said about cryptocurrencies, and we can talk about Bitcoin and all these topics to quite a large extent. But I think there's less clarity for a lot of people around the stablecoin topic and the deposit token topic, and especially if you can give it a little flavor from a Swiss perspective, right? Looking inside of Switzerland, but maybe looking also abroad Switzerland, because your currency also has some kind of international application as well, and maybe to understand how you see them and how you put them into perspective, because that could be a unique thing maybe not everybody is fully aware of yet.
Mm-hmm. So I'm saying all this from a bank's perspective, a Swiss bank's perspective, with the Swiss bank's balance sheet and the regulation behind all this. So the topic is quite complex in a sense that it's not straightforward as a Swiss bank. When you think about issuing a stablecoin, for instance. So what we have now is traditional deposits. And when we say we tokenize those deposits, we just put it in a different technical format. But everything else, the legal side, everything else from the operation side, from the bank side, it stays the same. It's still deposits. So from our deposits, most of those, our deposits are lend out again. So this is the basis of the financial system, right? So we take money from clients, we keep a little as reserve with the national bank, and the rest we invest in loans, for instance, right? This is how the money printing machine works. And now, when we say, or when people say, yeah, banks should do a stable coin, banks should do a stable, right? Yeah, maybe it doesn't really make sense for us, because when we do that, a stable coin in itself, in our definition in the Swiss banking world, we say, okay, it's, for instance, 100% backed with fiat money. This means that we have to keep everything in reserve. So 100%, not just 3%, for instance, we do for deposits. So this money is then blocked and cannot be used to invest, to give out loans, etc. And that is, from a macro perspective, a risk for the financial world, and from a micro perspective, maybe a very bad business decision. So it's not straightforward as a bank to issue a stablecoin that is fully backed, because in our sense, it really doesn't make sense. So this is why banks started to look into deposit tokens, which is the same thing as deposits. So nothing changes from the balance sheet side, from the capital side. It's just another form of deposits in a tokenized way. And then the question of interoperability comes into play. How can a deposit token from one bank be transferred to another bank legally, right? Without both parties or both clients have accounts at both banks. So we need interoperability between banks, between clients. And this is then basically just the custody side. So it's only possible with custodial wallets. Maybe there's a way we need to find a way for non-custodial transfers. So it's a very complex topic from a bank side, when you keep in mind that you have to make sure you have financial stability, you don't impose new macroeconomic risk vectors to the financial stability, and it's much more complex than just a circle, for instance, issuing a stable coin and having everything fiat backed. Stuff like this. For a bank, there are much more questions to take into account, and I refer the interested reader to the Swiss Bankers Association stablecoin paper I worked on, that highlights some of those challenges for the banking world when it comes to stablecoins vis-a-vis deposit tokens, vis-a-vis just normal deposits. So that can be found on the Swiss Bankers Association website. And it gives a good first overview on that topic. And there's still many things we have to discuss and work on and find solutions for. For instance, this morning I read that JP Morgan, they have a JP Morgan coin, which is basically just on a private blockchain. If I read it correctly, it's basically JP Morgan coin is just a deposit token on a private blockchain for JP Morgan clients that have international subsidiaries across the world and that want to move money around 24/7. There's no really a real application with blockchain behind it. You cannot interoperably transfer it to other banks, stuff like this, right? It's just in the whole ecosystem. It's inside that. Now I read that they're going to issue a tokenized deposits on another blockchain, but it's still only available to JP Morgan clients. So the question really is that the whole potential of this technology or not? And what does it add as a benefit to the payment landscape? Which is it's hard, right? Those questions to solve.
And why should I care as a client, right? My question always back would be, I'm a client, I can use the Circle stablecoin in my wallet, can pay with it to my Spotify account and so on, and you're still solving basic infrastructural issues. Why, as a client, would I not just go ahead and use the stablecoin? For me, in the first instance, it doesn't make a difference. I have something, and you know, you're describing a bank perspective, while from a client perspective might be different. But I think, and that's an interesting one. And I just see somebody, and I forgot to mention, you can post questions in the F&A box. Ask, I think, a nice question around this. Basically, and I'm paraphrasing it, so a lot of the efficiencies and in less need of intermediaries and so on is already demonstrated partly in DeFi and can already be delivered there, right? Which is a statement, because there's risk and other topics involved, that might not be as straightforward, right? But I think the question then is, and maybe that's a follow-up question, what is the role of banks and financial institutions from your perspective? And maybe zooming a little bit out from your bank, so you don't speak on behalf of your bank, right? I think that's important, but your personal opinion. Where do you see banks and financial institutions, their roles, and maybe a little bit further down the road, 10 years, 15 years? And if you have a view, I think that could be very interesting because you were so long in the field and you have the proper background to give maybe a very differentiated answer.
Yeah, so not only speaking for the bank, of course, but in general, I feel, especially in Switzerland, given our culture and our history, I think banks will remain a very large stakeholder in Switzerland and people's everyday life because it's the trusted gateway to financial services and in some sense also a little bit of technology and the mixture of it. And I think this will stay the same in a world where we get increasingly dehumanized by AI and deepfakes and what to trust and what not. I think having this rock that is your trusted house bank that you've known your whole life, that you probably been your whole life too, because your parents been there and they opened an account for you. And you do everything with them from financial services. You get your salary on there. You pay your rent. You make investments. This will stay the same because at the end of the day, I don't believe that most people feel comfortable enough to completely go outside of the banking world for their financial services. In a DeFi world, for instance, I think people want the trust and comfort and the relationship to a human person, albeit a telephone or having a store that can go to and speak to someone and that helps them out if there's a problem, that they just need that trust. Especially in Switzerland, this means something. That a bank in Switzerland still means something. It's PostFinance means something. Maybe Credit Suisse doesn't mean something anymore. No pun intended, but you know what I mean, right? It's still,
yes.
I still trust that over having a weird crypto exchange with a weird name that has barely a telephone number I can call to when something goes wrong, and then everything goes down the drain. So I've seen countless times issues when there's not the happy path. The happy path is I open up an account, have my credit card there, I buy crypto, keep it there, sell it, that's it. But as soon as something goes wrong, maybe I lose access, or there's a KYC issue, or God forbid I die and my kids have to take care of my account at that exchange, stuff like this, then it's just bad. It's a bad user experience. You don't want it. It's not good. It's really not good. And there the bank has much more history in dealing with these kinds of things. I'd rather have a bank I can go to, I can call, I know, okay, they're in Switzerland, I maybe even know people that work there, than some weird exchange on Cayman Islands. I'm sorry. When it's just 300 Swiss francs, it's fine, but not with my entire life savings.
So let me ask you a follow-up question there. So basically, if I can try to grasp the concept, you basically say I go to my bank, I have a relationship with my bank, and my bank then will be my path into whatever investment opportunity or financial service I need. Basically a trust anchor who maybe supports me or not, but at least secures much more professionally and vets much more professionally than I can the investment opportunity and your day-to-day payments need. But I understand that on the other end, you will enable investments in Bitcoin and in
Yes.
other
No,
DeFi
but
products. So
that's
basically, you're not
yes,
saying you
you're
cut off
right.
the opportunity to the
No,
world, but you want
no,
to be able to secure as much as possible.
no. So that's in Switzerland.
Yeah,
So that's our responsibility then. So when we say, okay, we're the trusted partner, we cannot ignore then the technological trends. We have to have answers to these kinds of things. Otherwise, we're not fulfilling the other side of our responsibility. It's not just good enough to be a trusted partner and take care of the needs. We have to have also the products, the services, the access to certain things. So we need to keep up with those technological developments, and we need to bring those into the bank if they make sense. And this is also part of our responsibility to stay innovative, to work on what's next, right? The new normal, so to speak. And this is also very, very important. And I
it's very
think
interesting.
just, yeah, you
I
have to
think that's very
remember, we
interesting. I want to get to one question
yeah,
because I think we have quite a few, and because I think it's interesting because it can highlight a little bit the discussion we're having now. And I think it's on this side as well. So what's the difference from you of getting things done? Because that's a lot of questions I get from people. How do I set up digital assets? How do I succeed as an organization? What's the best structure? And maybe that answer can educate some of the people who still are way behind where you guys are. And that is what has changed for you and changed the ability to get things done from being just an innovation function to become the digital assets department, right? What helped you there? What was the biggest change? Just the budget, and that's an add-on for me, just the budget availability, or what really helped you there get things done because you guys are doing things, right?
it's exactly this. So instead of just reading a book and watching a YouTube video, going to going to university or a school and having a teacher talk to me about these kinds of things, we really get our hands dirty. So we got into the nitty-gritty details of the technology, what it means from an operational side. Bear in mind the technology that is roughly 15 years old, the core functionality at least, and then still in some cases or in some parts very early on from a technological standpoint. The UX of the basis technology is not completely refined yet. So there are still processes on chain that are a little bit cumbersome, to be honest, and the UX is not 100% great. There's still work to be done. If not, then no protocol would hire basically any developers to develop the protocol further, right? So bear in mind that I think it was very important to really get going as a bank and not just theorize about these things, make live products and let
Get your
clients
hands
on that
dirty, right?
and get money into this and build up know-how across the entire organization. Because this now, where we are now as an organization, 3 years in, or maybe you can even argue 5 years in, is a much different place than we were 3 or 5 years ago. We're much more equipped as an organization. Our people are much more equipped with these kinds of topics, and I'm really proud. When I talk to them now, compared to when I talked to them 5 years ago, it's night and day. It's really night and day. And this is really cool to see. Basically, the stuff I've built now, what a huge impact this had on those people and on the organization. When I talk to them, this is really, really a cool thing for me.
I can feel your passion, and we could talk for hours probably. And it's very clear that you truly achieved something at PostFinance. I try to pronounce it a little correctly, and Thank you for joining us. Alexander Thoma, for people who joined a little later, head of digital assets, and happy to continue the discussion. I think there will be quite a few people maybe reaching out on LinkedIn to you if that's something you appreciate, to answer some of the questions we couldn't talk about. Thank you for being here. Thank you for your passion and your open discussion around the topic, and a lot of success. And we're looking forward, of course, also as GK8 to always accompany you along the way.
Yes, thank you, Ben. Thank you, GK8, for everything and for the invite. And thanks for the listeners and people in the audience who took time, half an hour, for this talk. So I wish everyone a great day. Thank you, guys.
Yeah, thank you also from me for all listening in, and looking forward to see you again sometime soon for the next one. Thanks. Bye.